Hi guys! Hope you are having a wonderful Wednesday. Today is January 13th, so let's try to do a recap on how the market is doing today. So for the past 3 days, or at least last Monday, we tried to watch over if the market will try to reach a new high. So the next level of resistance is around 7.5, around that area. So from last Monday, we can see a long shadow here. So we're seeing that the the uptrend on the market is being rejected, and in the past 2 days, and sorry, from yesterday until today, so the last two trading days, we are seeing a red candle. But from today, we are seeing a shorter red candle. So uh, we might want to watch if this will be a pullback for tomorrow. And yeah, so let's just watch the market for tomorrow. So let's screen some stocks. Try to check some of the stocks that I saw today. Okay, let's just change that color. So I've been using this indicator OBV to check on the volume movement. So what we can see here for Century Pacific Food, uh, we can see that it broke out yesterday. Okay, it broke out yesterday of its previous resistance level. So let's see if that is a significant level. Yeah, so around this area, right? The price movement has been rejected, or at least around 19, and it has become a support and a resistance during this time. So that is one of the reference. Oh, okay. Then we also got a hit here. So that is last 2016. So we can see that this level right here is a significant one. And from the rally or from the breakout, I can say that we successfully broke out, since we are also seeing a green candle on the next day after it broke out of that uh, price level or that price resistance. One thing that I can see here as well is circle. Okay, so we're seeing here a head and inverse, at least an inverse head and shoulder. Yeah, maybe around here. So for you guys, a head and shoulder, at least for not an inverse one, right? It means that there will be a trend reversal. So for here, we can see that we made a lower low and a lower low than that one. But when it tried to go down again, it is being rejected, so it went up. So that is an inverse head and shoulder pattern. So that's what I can see here. And from last October, we can see that it supported by the EMA 200. One thing I can see, RSI is working as well for that price action, going up as the price is going up here. MACD, it went up, and yeah, nothing to concern about the MACD. One thing that I'm just concerned about this action is because of the divergence on the volume with the price action. So what I'm saying here is, from here, let's here. So from here we can see that it went down. So around this area it went down, so we can see that as well. However, when it went up and went here, you see that there's a divergence here. Okay, and here as well. So we are seeing higher price, but the volume does not act accordingly, or at least side by side with the price action. So that is one thing that I'm concerned about. But since we saw a breakout, and seems like the volume is picking up as well from its previous, I could say, an accumulation level going up. Yeah, so I would like to watch this one. So see here, this one is going up, and we are seeing a high volume selling during December 17th. So that may be one of the reasons why we are seeing this divergence, because of the high volume selling. So we just might want to put your stop loss and uh, trail stop points. At least you can keep your gains, because a gain is a gain, right? One more stack that I want to see is Double Dragon. So what can I say with Double Dragon? So for Double Dragon, we can see from until last September until today that it is playing around this area. So let's just draw that box. Let me draw that box. Okay. So it has been accumulating, and since November 19, we can see that the volume is picking up. There's been a high volume of buying from last November 19. So for you guys, a high volume or an explosive one is an indicator of a trend reversal. So for now, we can just watch the price action. But if you want to position yourselves, I would suggest you can buy around this area. Okay. Let's just change that one to green. Okay. So buy around this area, because of the higher volume, higher trading volume. So for the RSI, nothing really indicative of what might happen, but it's fairly playing around this area. So we can see that the RSI went lower here and going here. So I guess that is in line with what's happening with the price action. MACD making some lows here. So from what I have said earlier, increasing trading volume here. So from what happened during the increase in the trading volume, since there's a high volume buying, sorry, we can see that it went up, but the divergence is happening here actually. So we can see that it has been playing around this area. It is playing sideways, but the volume is increasing. See? Increasing. But our volume is playing sideways. So since the volume is playing sideways, I mean, we can see those high and lows, but when it went back to the same level as it is previously playing around, or working around, we can see that there's a a higher high, so you might want to expect to for this one to correct itself. So let me just see. Price action. So stop loss, you might want to put your stop loss in the previous resistance level around here. Sorry, support. So you can see that price is being rejected here. Let's make it red. Latest box. I'll just change the color for this one. Nah, just delete it. So cut loss area around this area. TP. So let's put our target price. So this seems like a reasonable first target price. So if the momentum or the trend keeps on going, the next one should be around this area. Okay, see here, there's an accumulation here. Let's just check for any. Okay, yeah, so it hit around this area for support last 2018. So those seems like are some significant levels for Double Dragon. So for the risk reward ratio, you have here around 3% stop loss. I mean, if you're more keen, you can extend your stop loss here, but for me, I don't recommend extending that stop loss area because this is the pandemic levels. Okay, so for target, first TP is around 8.4%, and next TP should be around, what's that, 13%, around 13% around that area. So for your risk reward, so that is around 2.5 plus. So I believe the risk reward ratio is in our range. Okay, one last stock that I want to check with you guys, is it FGen or Fruit? Okay, Fruit. So what's with Fruit? So Fruit came out on a rally since October until mid-December. So it went up for a rally, forming a cup. So we can see here a significant area here and here for that resistance level of its rally. So will there be a breakout? Because I'm seeing here that the price action went up, so the formation that we might see here is brush. Let's see here. So is it a cup and handle? So if you can, or if you want, you can try to enter here to preempt the breakout around this area. 1.82 is the significant level. I mean brush again. Okay, so cup and handle. So if you are a breakout trader, entrance is here, or entry. Text breakout trader entry. If you are a high risk trader, entry. To preempt the breakout. One thing to how can we say keep your gains is sell half of your position around the resistance level. Okay. Okay, so that is one of the interesting part here. Volume action seems like it's following that those levels. So this is higher than this one, so no worries about the volume action. MACD, it's just some sweet timing here for a crossover. So if it cross over to the upside of the MACD histogram, I mean those are just a sweet timing for a confluence, right? RSI went up, then went down, going for another breakout area. So let's compute the risk reward ratio. So if you try to enter here, maybe just put your resistance level on the previous candle. Okay, so if this is for the breakout trader, this might be a TP tax, TP for early position to keep the gains. I think I have a better wording than keeping the gains. Then after breakout, the next resistance level would be around this area. Okay. So risk reward. If there's another TP, what would that be? Here? I mean, this the rejected, but this feels like it's been outstretched. But I mean, if you broke out of that area, then it is what they call a clear blue sky. Yeah, sky's the limit. But anyway, it is still better if you can position yourself and control your risk. So for the downside of entering this trade during this area is loss of 4.6, gain of 4.3. So that's not a really good. It's not a really good risk reward ratio. If you entered earlier when it bounced during this resistance level, it would be better. So I guess it would just be nice if you can enter during the breakout. So let's see. For the breakout, we have a reward of 11.6, and the outstretch reward that we are seeing is 33. So let's just be more realistic with a more attainable reward. So 11.6, I guess this will be your cut loss area if you try to enter during the breakout. So the cut loss would be around 4.5% with 11.6 reward. So that's 2 2 2:1 ratio for the risk and reward. So those are just tech. Let's just see. Can you see tech? So tech played a breakout last 11 January, Monday. So last Monday, tech broke out of that resistance level around this area. So we can see a lot of hits going here, going here. Would it be easier if I just use the brush? Here, here, here. And here. Okay, so it broke out of that area and we are seeing some pullback. So if you're trying to enter this trade, let's see, where is the start of that movement? Around here, going here. So retracement level for 382 is around this area. It would be good if it just bounced at the breakout area. So that would be called as the golden pullback. So after it broke out, it will pull back to that same resistance level before. So after breaking out of that resistance, it will be the new support where it will go and bounce up. So if you try to re-enter here, so might want to see what would be the price action for tomorrow and watch for the area here. Next resistance level will be, is it this one? This one. This seems like it's hitting a lot of area. Oops, sorry. So that area and the outstretch. Next TP. Okay, around this area. So just draw that one for reference, TP1. And TP2. If you try to bounce this area, entry here, cut loss would be around here at the head of that previous candle. So for the risk reward, around 4% loss. Then for the, if it tried to bounce that area, initial TP would be 12%. So that's a big one. Another one is 30%. So let's just look at the more realistic levels. Okay. So for the indicators, we're seeing here that the MACD is in the upside because of the breakout. So that was a good breakout. It is confluent with the MACD cross. Nice. Then for the RSI, it broke out as well. Oh, that's nice. Then it RSI bounced off today. So maybe we're not seeing a pullback directly from here going up. Then volume seems like it's confluent. Is it confluent? It's not that high compared to the previous level, so we'll see. I mean, an indicator is still just an indicator. It is just helping our decisions. So Yeah, so that is for tech. It, it would be interesting to watch this stock for tomorrow. Okay, so that's all for today, guys, and hope that we'll have more gains than our losses. Have a good day, guys. Bye bye.